Welcome, everyone, to another deep dive. Today, we're digging into the Lotusbee Market Digest for July 17th, 2025. Our goal, to pull out the key drivers moving the market right now. And quite a day it was, right? S&P 500, Dow, Russell 2000, all closing up. And the NASDAQ Composite, it actually hit a new record close.
Absolutely. A really fascinating snapshot. Definitely shows a risk-on mood in the market, quite clearly.
Okay, so let's unpack that. A broad rally like that.
Yeah.
What was really behind it? What fueled the move, according to the digest?
Well, what's striking is the economic data. It really seemed to back up this idea of resilience. We had June retail sales, for instance, up 0.6%. That was better than expected.
And strong consumer spending then?
Exactly. And jobless claims dropped too, down to 221,000. So, pretty strong signs of the U.S. economy overall. But interestingly, the VIX, the volatility index, it was actually up a bit, hovering around 17.4.
Huh. Okay, so the VIX ticked up even with the rally. That seems a bit counterintuitive.
It does, yeah. Which kind of hints that maybe there's still some underlying nervousness, or at least awareness of risks. Things like Fed chatter, maybe some tariff tension. That kind of background noise probably still playing a role, even with the positive day.
Right. So a layer of caution maybe, despite the green on the screen. Okay, so that's the macro picture. But the report really highlights some individual company stories too, doesn't it? Which stocks were really moving the needle?
Oh, definitely. Individual stocks were very much in focus. PepsiCo was a big one, surged over 7.5%.
No.
Yeah, they topped their Q2 earnings expectations, show some strength in consumer staples.
Okay.
And then you had United Airlines climbing about 3.1%. Strong travel demand still seems to be the story there.
Makes sense. People are traveling.
And a really key one was Taiwan Semiconductor, TSMC. They rallied 3.4%.
Ah, TSMC. Let me guess. AI related.
You got it. An AI-led beat on earnings, and they raised their outlook too. Another sign of just how powerful that AI theme is right now.
Keeps coming up, doesn't it? Okay, so those are some big winners. But the market's rarely a one-way street. Any significant pullbacks mentioned?
Absolutely, yeah. It wasn't all positive. We saw some pretty notable drops too. Elevance Health, for example, was down sharply, 12.2% after they missed on earnings and their guidance disappointed.
Ouch. Yeah, the market doesn't tend to forgive earnings misses easily these days.
No, it doesn't. And Abbott Labs was down about 8.5% too. Seemed like maybe just some weaker investor sentiment around some of their business segments. It really kind of underscores how focused the market is on corporate performance, on actual earnings. It seems to be overriding some of the broader noise.
Got it. So earnings are really king right now. Now, thinking about broader activity, the report points out some heavily traded names. NVIDIA was near record highs again, still that AI wave.
Yep, NVIDIA's still riding high on AI demand, nudging those records.
Alphabet saw strong volume, too. Something about tech rotation.
Yeah, strong volume in Alphabet, described as tech rotation. And MicroStrategy was active, too, seen as more of a thematic crypto play.
Right, the crypto connection there.
And if you sort of connect those dots, zoom out a bit, it really does highlight how dominant tech still is. Particularly AI, obviously, with NVIDIA and TSMC.
Makes sense. And crypto. Bitcoin holding up.
Yeah, Bitcoin was holding pretty firm near its highs, around, what, $118,700 or so.
Yeah.
Seems like institutional appetite is pretty stable there. Altcoins were generally following suit.
Okay. And anything else? Commodities?
Yeah, briefly mentioned. Oil, specifically Brent crude, found support from that economic strength we've talked about, holding around $67, $68 a barrel. Gold and copper were pretty steady. Gold is the, safe haven kind of play. And copper is sensitive to the macro outlook, just holding their ground.
Okay, so bringing it all together, the Lotusbee perspective, the narrative they're painting, it sounds like it boils down to strong economic data plus strong company earnings equals new record highs. Is that about right?
That's the basic equation, yes. Strong macro, solid earnings. It seems pretty straightforward on the surface. But, the interesting part is how the market is reacting. Despite all the background noise, Fed uncertainty, tariff talk, that slightly higher VIX we mentioned, markets seem pretty upbeat, right? They're buying into this resilience narrative.
Yeah.
Which does raise the question about valuations being elevated. And the report uses this phrase, tightening cables.
Tightening cables.
Yeah.
But what does that imply? Less room for error, more fragile.
Exactly. That's likely the implication. Suggests maybe the market is becoming a bit more sensitive, less tolerant of shocks, perhaps. So the report really seems to emphasize that staying ahead of the curve on earnings reports and paying close attention to any Fed commentary. That's going to be really key going forward.
Okay. Tightening cables, that definitely gives you something to think about. So it leaves you wondering, right, what are you watching for next? With markets showing this resilience but valuations up there and these sort of background tensions, how could the next batch of earnings reports or, the next comments from the Fed, how might they reshape this landscape? And just how tight are those cables getting? Definitely something to keep in mind until our next deep dive.